Welcome back. We've been discussing the extraordinarily comfortable state of the fisc, but possible problems in the second half if corporate taxes fall off, considering that we are seeing a dent in corporate margins. But otherwise, it's a positive fiscal situation that we have discussed so far. I've been speaking to Dr. Pinaki Chakraborty, A. Prasanna, Aditi Nayar, and Samiran Chakraborty. Gentlemen, Aditi, thank you very much for waiting on. Samiran, the way we ended was the health of the fisc and the larger number of entities who are now ready to buy bonds, especially insurance and pension funds. Some of them are hedging, booking forward. So I understand about 40,000 crore of demand for bonds has come simply from this forward agreements that insurance companies have entered into. But can we therefore assume that we have reached a more comfortable level of tax to GDP?
So there are two separate issues.
Yes.
That one is the tax to GDP part, where we are now seeing that the tax to GDP has reverted to pre-COVID levels. Sometimes in certain kinds of taxes could be slightly better than pre-COVID also. And that's showing up in a higher tax buoyancy number. But the other question that you were posing essentially about the funding of the fiscal deficit and who are going to be buying these bonds, I think there the important point to take note of is that while we were discussing insurance, pension funds, etc., which are showing the fact that even this bond demand is price elastic. So if yields rise, then at some point of time, this product becomes more attractive and a natural demand comes from these real investors. And on the other hand, I think where we have to recalibrate our numbers is to think that the way we typically calculate the excess SLR for the banks, that might not be entirely the right way to look at it, given the need for banks to hold the high quality liquid assets to meet their LCR ratios. So effectively, the bank's mandatory holding of these bonds might be much higher than what the SLR ratios might suggest. Okay. And that might be creating a certain amount of, again, inherent demand for bonds, which is why, despite this huge supply of papers, the market yields have not moved up as much as people would have feared, resulting in the flatter yield curve that Prasanna was referring to.
Okay, no, I agree with you. There were two separate questions. The tax to GDP was separate and the funding of the deficit. But in both cases, we seem to have some slightly medium-term positive trends. Or is it only a one-off? Prasanna, that's what I was trying to get through to Samiran. Is it that this year we have a buoyancy in taxes, but next year as growth tapers, it will be difficult to maintain this kind of buoyancy? And it may also be difficult to give up on certain subsidies once it is entered into. So should we believe that there can be problems next year in the fiscal deficit?
Yeah, so I think there is definitely a cyclical component to this buoyancy in taxes. So obviously that will get hit as a business cycle slows down. So that will be especially, I think, visible in direct taxes, especially the corporate taxes. But also, I think it is likely there is a structural component also. I think that is showing up in GST, for example, I think because of tightening of compliance. And probably, I think, this drive towards formalization is also helping on the corporate tax side. So I think there are two elements here. We have to separate that. So definitely the slowdown will hurt going forward. There's no doubt about it. And I think that's a great point you made, that I think a lot of this buoyancy has helped support a lot of this rise in welfare and subsidy spending. And I think this was all partly because of pandemic, partly because of the war. Global prices have gone up. But this is not a sustainable situation. So you cannot bet on this kind of tax buoyancy year after year and make these schemes permanent. So you have to start scaling back some of those schemes. Clearly on the subsidy side, I think on the fertilizer side and the oil side, hopefully as the global prices continue like this or even come down into next year, you can slow down that. On the welfare side, basically the free food grains program, which I think was discussed earlier. Again, there I think there is a need to taper that. So I mean, I understand that government might want to run this scheme for some more time, but maybe they can relook at the quantity of food grains being distributed. I think, like Aditi pointed out, there is an issue from the food stock position also.
Yes.
So there is a fiscal issue also. There is also supply of food grains. That is also an issue. So maybe taking that into account, you can start kind of reducing the amount of food grains you're supplying, and over a period of time, you can phase it out.
Okay. Yes. So, I mean, assuming the current rate of tax buoyancy could be an issue, but we will have to wait and see. The jury is perhaps still out. Aditi, you know, the states are in an extremely good position. I just got data, and much of it coming in from Prasanna, that this year the borrowing calendar from first quarter to third quarter for states was 6.5 trillion, but they've actually borrowed only 3.76 trillion. Is it that the states have much more elbow room to spend? Can we expect some kind of a stimulus to the economic growth? What's keeping the states from spending?
Sure, Lata. So our estimates are that the states have borrowed about 30% less than what they had indicated for the period up to November 15th. So from April 1 to November 15th, their actual borrowings are about 30% lower than what they had indicated through the RBI. And this is 5% lower than the same period of last year. Now, why are they borrowing less? I think there are some specific issues. Firstly, even they had underestimated their revenue buoyancy, the way that we're seeing for Government of India, that the actual tax growth is much higher than what was expected at the time of the budget. Another issue, then related issue, is that they're also already getting and likely to get far more tax devolution in the remainder of this fiscal year than what was budgeted for the full year. So as of now, the states have got 2 double tranches of tax devolution. So there's a monthly pattern of taxes being transferred from Government of India to the state government.
Yes.
And in August and in November, effectively, the states have got double tranches.
Yes.
Already. Even after that, we believe they will be entitled to 3.8 trillion of tax devolution over the last 4 months of this fiscal year. So that's still a lot of money which is left to be transferred to the states. When money comes in unexpected and back-ended, our observation is that the states are not really able to channelize it very well towards capital expenditure. This happened last year as well, when tax devolution was particularly back-ended into Q4. And again, we are looking at a situation where maybe it's not as back-ended as last year, but there's still a lot of money to be received by the state governments in the last 4 months from pure tax devolution. Similarly, the CapEx loan scheme from Government of India, while the approvals have been quite good after August, the actual offtake under the scheme was very low up until September and has picked up to about 30,000 crore only at the end of October, is what we are understanding from the data which has been. We're hopeful that states will be able to undertake back-ended capex. There's a lot of fiscal space available for them to do that.
Exactly.
But actual spend was flat YOY in the first half of this year.
Okay.
So will they really be able to spend the space which is available? I'm not sure every state will be able to do that.
Okay. Well, Dr. Pinaki Chakraborty, we are out of time. So the final comment really from you. How does one ensure that the states spend more? We have a fortunate situation where the center perhaps is just about hand to mouth, but states have a lot of elbow room. The Tamil Nadu finance minister was on record saying that instead of giving them extra money as an interest-free loan, it would have been better if he got it as a grant, because then it would be untied. Do you think that one way to stimulate the economy is to give money to the states untied? Is that perhaps the way out to kickstart the economy, or at least to accelerate it? You're on mute, I think. Dr. Chakraborty, you're on mute. Oh, Dr. Chakraborty, you are on mute. I don't think he can hear me. Okay, well, I think the connection has snapped. Well, that really is going to be the big question. Whether one way to move out of this economic growth situation.
Can I
yeah, go ahead, sir. Now we can hear you.
Yeah. Okay, the first issue with regard to borrowing, I think states' borrowing is going to pick up in the second half, and I hope they are able to spend up to 3% of GDP. And my expectation is that if they are able to spend up to 3% of GSDP, that would actually enhance capital spending. That is one. Second,
how do you make them spend?
The 1 lakh crore that was given was an untied grant, so untied borrowing. But there are a couple. Then there are detailed, guidelines were issued. About 80% of that untied money was given based on the devolution formula of the 15th Finance Commission. So 80,000 crore is untied. So there is a large part of it is part of this money is untied money. And one issue, that quality of capital, quality of expenditure. I think revenue deficit versus fiscal deficit will also have to be seen at the state level, for which we don't yet have a credible 23-24 data, but available evidence, monthly data shows that revenue expenditure has reduced. So my expectation is overall capex is going to go up in the year 22-23.
Okay.
Taking center and states together.
Okay. Well, what I meant by untied, or at least what the Tamil Nadu Finance Minister appears to have meant, is that Article 293 of the Constitution says that if you take a loan from the centre, then all your subsequent borrowings from the market can be conditioned by the centre. The centre can impose conditions, and that is why he wanted the money as a grant and not as a loan. That's what I meant by tied. But in any case,
that's not the position, because that money, 1 lakh crore, that was allocated in the
it's not tied to a project.
80% of it was given based on devolution formula.
Yeah, I take your point. That definitely gave the southern states an advantage, but they wanted it as a grant and not as a loan. The separate issue is that states are not spending as much as the money they have, and maybe we have to look at ways to increase the state government's ability to spend. But that discussion is for another day. Thank you very much, Samiran, Prasanna, Aditi and Dr. Chakraborty.